Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze another new industry, which is the ceramic tiles industry in India, as well as the sanitary ware industry. And in this tiles industry, we are starting off with the market leader itself, which is Kajaria Ceramics. So if you're new to the channel, please do subscribe and hit the bell icon, and you can join our Telegram channel where you can be daily in touch with me for latest updates and market analysis. Let's get started. So let's talk about the industry first before jumping into the stock specific analysis. The global ceramic tiles market is at a size of about $207.7 billion in 2020, and it is expected to grow at a CAGR of 6.5% from here onwards. And globally, China is the market leader in the tiles manufacturing, and India follows China in the second place. The Indian ceramic tiles market size is about $3720 million in 2019, and it is expected to grow to a size of about 7144 million by 2027, growing at a CAGR of 8.6%. So what do you observe? You observe that the Indian tiles industry is growing faster than the global average. And globally, if you compare in terms of exports from different countries, India is the fourth largest exporter. And in India, more than 60% of the market is still in the hands of unorganized manufacturers and distributors. So there is a lot of chance of shift in this market from unorganized sector to the organized sector, generating good amount of revenue for players like Kajaria in this industry. Few triggers which would lead to the growth of the industry is that the government targets to set up about 100 new airports by 2024. And the warehousing space in India will increase to a size of about 344 million square feet by 2022. Per capita tile consumption, if you compare globally, India is at the lowest position with 0.6 square meter per person, compared to Brazil about 4 square meters, China about 3.4, and the world average is about 1.4. So looking at this metric also, we can understand that the amount of consumption in India in the tiles industry can be expected to grow further in the coming years. In terms of manufacturing, let us compare globally the industry. China in 2019 holds a market share in terms of manufacturing of about 41% out of the total manufacturing happening world over. So China is well ahead in terms of manufacturing compared to the other countries, followed by India at about 10%, and India competes with other countries like Brazil, Vietnam and Spain at about 7, 4.4 and 4%. These are the few key trends observed in this industry. Earlier, tiles were used just as a part of flooring in the construction, but now tiles are used as a style statement. They form a very important part of your interiors design. And with technologies like inkjet printing, which is coming in the tiles, the manufacturers are able to give you customized tiles which are matching as per your look and feel of your house. There's a trend shift from people moving from the granites and marbles to tiles because tiles are more affordable. And unlike earlier, they are getting a lot of variety in tiles, as well as there are tiles which are available which give you the look and feel of exactly like a marble or a granite. So that's why there's a shift from using marbles and granites towards the tiles. With the infrastructure push given by the government as well as the private sector, which is experiencing good demand in the near future, the tiles consumption in India is expected to grow well. And urbanization, which is leading to shift of people from the rural to urban areas, is creating more demand in the urban areas. There is a lot of innovation in this industry. As we discuss further, you will get to know the new products which the company and the various players in the industry are manufacturing. There's also a trend of reverse migration where people are unable to afford homes in the tier 1 cities. They go back to the tier 2, tier 3 cities, and the companies like Kajaria are experiencing strong demand even from the tier 2 and tier 3 cities as well. And looking at the West, now people are having nuclear families in India, which is leading to more and more home construction and more demand of tiles in India. Coming to the sanitary ware market. Now, why are we discussing sanitary ware? Because Kajaria has also diversified from tiles manufacturing to sanitary ware also. So the sanitary ware market globally is at a size of about $32.1 billion in 2020, and it is growing at a CAGR of about 6.8%. And in India, the size is about $7953 million, and it is growing at a speed of about 9.3 CAGR in the near future. So the sanitary ware market is also experiencing good tailwinds and it is growing in higher single digits. Now, as we understand the industry, now let's come to the company which we are going to analyze this time, which is Kajaria Ceramics. The Kajaria Ceramics is India's largest tile manufacturer and the 8th largest manufacturer in the world. It has presence across the entire value chain in tiles manufacturing, and everything is done in-house. And now they have ventured into bathware and sanitary ware with their new brand, which is Kerovit, and they have recently ventured into the plywood segment with a brand called Kajaria Ply. They have 8 manufacturing units in India. They have a total capacity of about 70.4 million square meters, and they have a network of more than 1600 plus active operative dealers. The management of the company is headed by Mr. Ashok Kajaria, who is the chairman and managing director of the company, with his 2 sons, Rishi Kajaria and Chetan Kajaria, who are the joint managing directors, helping him manage the company. And they have been into the business for almost 3 decades. So they have very rich experience of managing this business. Let's talk about the history of the company. They started in 1988 with manufacturing of 1 unit with capacity of just 1 million square meters in UP. And in 1998, they had set up their second plant in Rajasthan with a capacity of 6 million square meters. In 2012, they acquired various companies like Jax, where they acquired 87.4% stake, Venar, they acquired 51% stake, and Kosa, they acquired 51% stake. So they did some key acquisitions in 2012. And in 2016, they started their third manufacturing plant in Rajasthan with a capacity of 6.5 million square meters. In 2019, they started their fourth plant at Srikalahasti in Andhra Pradesh with a capacity of 5 million square meters. So combining all these, they have now 8 manufacturing units, as you can see on the screen, which is spread across various regions in India towards the west, north, as well as the south in Andhra Pradesh. Now let's talk about the business segments. They broadly divide their business into 5 segments, which is ceramic wall and floor tiles, polished vitrified tiles, glazed vitrified tiles, bathware, and plywood and laminates. Under the ceramic wall and floor tiles, they have manufacturing facilities in Rajasthan and Andhra Pradesh, and they also source some of their products from some reputed vendors in Gujarat. The specialty in this segment is they always come out with out-of-the-box designs to lure their customers. So these are some photos of ceramic tiles where you can use the ceramic tiles on walls for decorative look as well as on the flooring as usual. Coming to the polished vitrified tiles, these are comparatively larger in size and they give a look and feel of marble or granite. They are more used in the commercial spaces. They have manufacturing units in Rajasthan as well as Gujarat for polished vitrified tiles, and they also outsource some of their manufacturing to some reputed vendors in Gujarat. From these photos, you can understand that they are giving a complete look of granite or marble used in kitchen, washrooms, as well as tabletops in the working area. Coming to the glazed vitrified tiles, these are also manufactured in Rajasthan, UP, which was their first plant, and in Srikalahasti, Andhra Pradesh. So this is the look and feel of the glazed vitrified tiles. Now coming to the sanitary ware or bathware segment, in this they are working under the brand Kerovit by Kajaria. In this they manufacture faucets as well as the sanitary ware products. The faucet facility is in Rajasthan, Gailpur, and the sanitary ware manufacturing facility is in Morbi, Gujarat. This segment has recently turned profitable in terms of the bottom line, and in this to market these products, they open exclusive showrooms as well as studios by the name of Kerovit World and Kerovit Studios. They have 17 to 18 customer relationship centers spread across India. Earlier, this was left to the franchisees, but now the company has taken over the customer relationship management to provide their customers better service. Presently, they have a capacity of 7.5 lakh units per annum of sanitary ware and about 10 lakh units per annum of faucets. So these are some products which they manufacture under the sanitary ware segment. And you can also observe that the company is using very well-known faces for their marketing and promotion purposes. The next segment, which is the last segment which they are into, is the plywood and the laminates. In this, their brand name is Kajaria Ply. They manufacture plywood, blockboard as well as the flush doors, which are doors made of wood. The manufacturing of this segment is outsourced to some vendors in Gujarat, Uttarakhand, West Bengal and Karnataka, and they have launched products such as Super 710 Plus, which is a hardwood product, and they have also started digitally printed products in the wooden segment. They have recently partnered with a vendor in Surat for manufacturing flush doors. They are also doing a lot of digital marketing to promote their brand, as well as they are doing ground level marketing to connect with various carpenters and other dealers in the plywood segment. So these are some of the products in plywood which they manufacture, and Ranveer Singh is their brand ambassador for this brand. Now segmental wise, we will understand how much is the revenue from each segment. They have broadly split their revenue into of tiles also into own manufacturing, subsidiaries manufacturing, as well as the outsourced. So their own manufacturing, they have got a revenue of about 51.7%. To their subsidiaries, they have about 12.9%, and outsourced tiles revenue is about 25.4%. So still, in spite of getting into the new segments, their tile segment is getting them maximum revenue, and sanitary ware about 7.6%, and plywood is just a meager 2.4%. In this chart, you will be able to understand how much is the tiles manufacturing volume over a period of years. The red color one are the vertified tiles and the blue ones are the ceramic tiles. So up till FY19, the growth in terms of volume is steadily growing. But in FY20 and 22, they have entered into a consolidation phase in the tile segment. Year on year also, if you see in terms of volume, there have been a decline from FY20 to 21. Segment wise, if you see, plywood has increased from 28.92 to 39.15, and sanitary ware have increased from 174.24 to 209. So the newer segments are growing, although the tiles totally has seen a slight decrease in terms of volume in FY21. Now, who are the competitors of the company? As we have seen in the industry analysis, China is a dominant country in the tiles manufacturing space with a 40% market share across the globe. So there is a stiff competition from Chinese manufacturers when they sell in India, as well as when Kajaria exports to other countries. And there is a competition from other countries like Spain, Brazil, and the others. Within India, the company competes with companies like Asian Granito, Somani Home Innovation, Somani Ceramics, HR Johnson Tiles, Orient Bell, Varmora, Simpolo, Serra Tiles. So there are a lot of listed as well as unlisted players which compete with this company. And as we have discussed, still there is more than 60% of the market which is unorganized, which means people are buying unbranded tiles for their usage purposes. When we compare them with their peers in terms of their spend in promotion, Kajaria, when we compare it with Asian Granito, Somani Ceramics and Nitco, they have been spending one of the highest percentage compared to the net sales in the branding and promotion. And when we compare the margins of Kajaria with the other players in the same industry like Somani Ceramics and Asian Granito, Kajaria, being the market leader and having operating efficiencies, generates higher margins compared to its peers. So this is one competitive edge of this company, as it generates close to about 20% gross margins in this business. What are the competitive strengths of this company? As we have discussed, first thing is the higher margins, and the company has 8 manufacturing plants which are strategically located across different regions in India. They have a very strong dealer network, and they have a product basket which is diversified in all the segments of tiles. So when you talk about Kajaria, they are manufacturing tiles across entire segments. Whatever type of tile you want, they manufacture, as well as in terms of price point, whether you want affordable tiles, you want premium, semi-premium, across all price points also they have varieties of tiles. So their huge distribution or their huge variety of SKUs is also their strength. It's a net debt free company. In spite of doing regular capex across all the years, the company still is net debt free. And because of their operating efficiencies, they are generating higher margins. They are spending a lot on the research and development as they keep coming up with newer products every year. They are spending a lot in automation of their plants and using latest technologies in their manufacturing, as well as managing the factory as well as the customer relationships. They have a very strong brand recall, because everybody, while we are watching cricket or television or when we are seeing digital marketing, every one of us at least one time has seen the brand Kajaria, and we can recall when we talk about tiles that Kajaria is a very reputed brand in this industry, and they are very strong in digital marketing. The way they are showcasing their products with their in their dealers showrooms is also quite commendable. What is the growth outlook of this company going further? Management is giving a clear-cut guidance of faster growth than industry. So when the industry itself is growing at a higher single digit, then you can expect this company to continue the growth in double digits going further. Although the recent years the growth has not been so much and it's kind of a plateau, but with the recent demand which is coming up in the real estate sector, we expect this company to grow in double digits for at least the next 2 to 3 years. The China plus one strategy, where a lot of importers across the globe which were importing from China earlier are now looking for another vendor other than China, that will create a lot of demand shift from China to India. And the company keeps running dealer motivation schemes where the dealers are encouraged by giving various incentives to boost their sales. They keep coming up with new innovative products in all the segments which they manufacture. Their dealership network is growing and they plan to penetrate to other geographies within India and other across the globe. They keep participating in various exhibitions and shows, and wherever they don't have manufacturing capacity, sooner or later, to have that cost advantage and location advantage, they may set up more manufacturing facilities in different states where they don't have presence, so they can offer their customers better prices, keeping their margins intact and get a larger chunk of the market share. They are entering new verticals. As you can see, they have entered into sanitary ware as well as plywood, and they have been regularly doing capex, as we'll see in the coming slides, and they are also open to inorganic acquisitions as they have done in the past in 2012. So here is their capex plans across different plants. We'll briefly go through it. So in Rajasthan, Gailpur, they are extending their capacity to manufacture ceramic floor tiles by investing 60 crores, which will generate a capacity of 4.20 MSM, which is million square meters, and this is expected to get completed by April 22. In Srikalahasti, they are manufacturing glazed vitrified tiles. About 110 crore is to be spent, and this will also get completed by April 22. Jax Gujarat, which is their subsidiary, they are manufacturing polished vitrified tiles, spending 80 crores. Kajaria Bathware, they are expanding their bathware capacities by spending 5 crores. This is a brownfield expansion by more 6 lakhs pieces. And Kajaria Ultima, which is the Gujarat, they will manufacture the larger tiles, which is slab manufacturing, by spending 210 crores, which will extend the capacity to 5 million square meters. Kerovet, which is their sanitary ware, again they are expending about 80 crore to increase the capacity by another 7 lakh units. So across all the verticals, they are planning either brownfield or greenfield expansion, which are getting completed in the next 1 to 2 years. So when this capex are done, then automatically you can see a higher share of revenue depicting in the company's financial. What are the risks which this company might face? There is a huge, this space is very competitive from players within India as well as outside India from countries like China. This is dependent on the real estate or the infrastructure demand. So real estate, although it's not a small cycle, when there's a cycle in real estate, it runs for at least 3 years, 5 years, and even 10 years sometimes. But sometimes when there is a downturn, it goes on for 2 to 3 years also. So it is a kind of a macro cycle where you have to catch the cycle right. There are a lot of government policies. So when the government comes up with various projects and infrastructure spends, that can generate a lot of demand. And if such policies or projects are not done, then there could be slack demand in the sector. It is having a great impact of the inflation. You can see in the financials, which we are discussing in the coming slides, that the company is facing a lot of pressure on their margins due to inflation. The company has to innovate new products, enter new verticals, and be at par with the products which are developed globally. Otherwise, if the customers start moving towards the new products, then the company's old established products may start losing market share. There's a credit risk as the company works on credit with their vendors, forex risk as it's a global company, and other regulatory risk which the other companies also have. Now, after understanding the business, industry, competitive advantages, and various qualitative factors of the company, let's talk about the numbers. Starting with the quarterly results, the revenue increased from 838 crores in last December 21 to 1068 crores in December 22 quarter. EBITDA increased from 182 to 184 and PAT from 119 to 122. So what do you observe? There is a massive increase in the revenue, but the bottom line as well as the operating margin is under pressure. EBITDA margins have gone down from 22% to 17% and profit after tax from 14 to 11%. So this pressure is created by increase in raw material costs, especially the gas cost, which is used in the manufacturing of tiles. In terms of volume, the sales have increased 14% year on year. Now let's talk about the yearly numbers in the last 5 years. I have taken from financial year 2017 till the trailing 12 months, as we have already completed 3 quarters in FY22. And there's a strong demand in this year which is expected to continue further. So I have thought that taking an average of these 5 years would be more appropriate rather than ending in FY21. So in the last 5 years, revenue has grown at a CAGR of 7%, which is not impressive given the valuations which the company is getting. But if the company continues to grow in double digits from here on, then their valuations may be justified. So in trailing 12 months, the company has clocked about 3,556 crores of revenue. The EBITDA has grown at a CAGR of about 8.6% from 457 crores to 636 crores in the trailing 12 months. EBITDA margins have improved from about 7% to around 18 to 19% in the recent couple of years, although there was a dip in FY19 and 20. The profit after tax has increased from 235 crores in FY18 to 408 crores in trailing 12 months, and this growth is at a close to 15% CAGR, which is quite appreciable. Profit after tax margins have improved from about 7 to 8% to about 11 to 12% in the recent couple of years. Equity is constant, reserves are steadily growing as the company is making constant profits and positive free cash flows. Borrowings are going down. In fact, if you see net debt, the company is net debt free as it has sufficient cash on the balance sheet. Trade payables are under control. There is no abnormal movement in trade payables. Fixed assets have been steadily maintained because the company is providing depreciation as well as they are doing regular capex in terms of brownfield and greenfield expansions, and this fixed asset block is expected to grow much higher in the next couple of years as there are a lot of capex which were earlier planned which will be completed now. Inventory is steadily maintained. There is no abnormal movement in the inventory levels, and in trade receivables also there is no abnormal movement. Debtor days are somewhere around 2 months, which is fair in this industry. Inventory days is slightly on the higher side. In some years, like in FY21, it was about 189. Now it is under control at about 119. So this can further go down to improve the efficiencies of the company. If it is maintained just somewhere around 2 to 3 months, it would be much better. The cash equivalents are increasing from 82 crores in FY18 to 560 crores on the balance sheet as on September 2021. ROCE has gone down from about 33% to about 22% recently, but anything above 15 to 20% is a very decent number. Operating cash flows have always been positive, and in FY21 the company has generated more than 500 crores of operating cash flows. Free cash flows have also been positive, and in FY21 the company has generated more than 396 crores of free cash flows. Now let's understand the shareholding of the company. There is no pledge. Promoters hold about 47.5%, public 12.8%. There is a decent FII and DI holding in the company, where FIIs hold about 22.5% and DIs hold about 17.3%. So this shows the confidence of institutional investors in this company. Now let's talk about the valuations. The last traded price was about 1285, 52-week high and low is about 848 to 1379. In the last 1 year, the stock has given about 43% return to the shareholders, and in the last 3 years, average CAGR is about 33%. Market cap is somewhere around 20,500 crores. It's a face value 1 share. EPS is about 25 and PE is about 50. Industry PE is somewhere around 30-35, and the 5 years median PE of this company is about 40. In terms of book value, it has a book value of 128 and PB ratio of 10, and market cap to sales is somewhere around 6 times. So in terms of valuation, the stock presently is overvalued and you should look for a better time opportunity to enter into the stock. Let's give a glance at the price chart. The stock may have strong support somewhere around 1050 levels. So whenever there is a dip and this comes to somewhere in the range of about 1000 to 1100, you can consider accumulating the stock if you are satisfied with the financials and the business outlook of the company. And as at that range, the valuations also will become much more reasonable. So this is about Kajaria Ceramics. I hope you like the 360-degree analysis which we have done about the business of the company as well as the financials. To summarize, the promoters are well experienced as they have close to 3 decades of experience in the ceramic tiles industry. They have been the market leaders in the industry in India as well as globally. They have a dominant position as they are the 8th largest in the world. They have a very strong brand recall and they are now diversifying their business into different verticals. They command higher margins in business, which shows their strength in the market. They have a very strong distribution network, so they can use the same distribution network to sell more products in various industries. They keep innovating and coming up with new products, and in terms of financials, the company is very sound. Although these are the positive factors, but the company will face stiff competition from other manufacturers in India as well as abroad from countries like China and Brazil. As the company is venturing into new verticals like sanitary ware and plywood, I am mainly concerned with their stepping into plywood, as plywood generally is a low margin business, and the companies like Greenply, which are already into the business, are struggling to maintain decent margins in the recent times. So the company's steps by venturing into the new verticals have to be closely watched. If the allocation of capital goes wrong and they enter into the businesses which generate lower ROCE and lower margins, then the valuations may get derated. And looking at the present valuations, the stock is overvalued, so you should find the right opportunity to enter into the stock. So this is about Kajaria Ceramics. I hope you like the video. If you like it, the like and subscribe button. And you want me to analyze your favorite stock, don't forget to comment the name of the stock in the comments below. I'll surely consider it for the upcoming videos. Do join our Telegram channel where we discuss daily market analysis and lots of other interesting stuff. So thank you for watching and have a wonderful, wonderful day.